We have a big week coming up for GBP, guys. Starting off on Monday, we have Brexit talks. So listen, we've got high-level officials involved this time, not just the Brexit negotiators Barnier and Frost. So we've got UK PM Johnson, he's going to be on this call, and European Commission President von der Leyen. Now, to be honest, in the last couple of weeks, no progress really has been made in the talks. The same sticking points, fisheries, level playing field, governance, still remain. However, you've always got to remember, when high-level officials are involved, like Johnson, like von der Leyen, there's always a chance that you might get a breakthrough. That breakthrough could be UK agreeing to an extension or moving towards an extension, or it could be, a breakthrough on one of those sticking points that I just mentioned. In any of those cases, you could see a spike higher in GBP. Moving on Tuesday, we've got labour market data out of the UK. Now, most of this data is for April, so it's quite backwards looking, not really that relevant. We know it's going to be bad because April was bad. However, there is a more timely aspect to this labour market report, the claimant count change. That's basically, it's like that US one, the initial jobless claims. It's like the number of people that have gone on to unemployment benefits. So that should be interesting as well to see the state of the UK labour market. Moving on to Wednesday, CPI data. Interesting from the central bank perspective, because basically we're expecting a very soft print on Wednesday, which really gives the Bank of England room to continue with their very dovish policies at the moment, which brings us nicely onto Thursday, which is the Bank of England's next meeting. Should be an interesting one because the meeting is live, in the sense that markets are expecting a big change to the Bank of England's QE policy. Basically, the current rate at which the Bank of England is buying assets, it's going to run out of space to do so. So it needs to increase its QE program. Most people expect a 100 billion increase to the program, but it could be more, could be less. GBP is going to be volatile. Another hot topic in the Bank of England has been the potential for negative rates. So, markets going to be looking out for any hints if they're moving towards or moving against negative rates. It's going to be interesting, could be choppy. Just final thing in the week, retail sales. Similar analysis as with the labour market report. It's going to be bad, guys. UK is in lockdown. However, this data is for May, so we are expecting a slight improvement on the April data. GBP, again, could be a little bit choppy, depending on if it's a big miss or a big beat on expectations. Who knows? But either way, guys, a lot to think about in the coming week for GBP. That is pretty much it from me for now, and I'll see you in the next one.